Thank you for coming. I'm Charles Allen, CEO of BTCS, Inc. We are the first and only U.S. pure play public company focused on Bitcoin and blockchain technologies. Just take a moment, look at the safe harbor statement. So what I'm going to do today is just kind of walk you through the investment highlights. I'll spend a little bit of time, or a decent amount of time depending on the audience, on the industry, and then I'll talk about our company and the broader opportunities. So as I said, we're the first pure play company focused on Bitcoin and blockchain technologies. If you don't, can I just see just a show of hands, who here has heard of the blockchain? Okay, so a few. Bitcoin? Does anyone here actually own Bitcoin? Okay, you actually own Bitcoin. That's good. Most people don't, that are sitting in this room actually don't need it. The use cases are not really designed for the well-banked, unless you want to speculate. But we'll talk about that later. So we're in the business of securing the blockchain through our transaction verification services business, which is we're rapidly scaling and is starting to drive revenue. I'll talk a little bit about that more. But let's jump into the industry. So what is the blockchain? It's a decentralized general ledger database. So it's just a database of who owns what. And if you think about money or other stores of value, really they're just ledger systems. So if you have, great examples, if you have money at, let's say, Chase Manhattan Bank, you actually don't have a pile of cash sitting in a room with your name on it. You just have a line item in a database. And if you move that money to someone else, they debit you and credit them. Right? If you use QuickPay, it moves from one person to another. It's not backed by gold. It's just a record-keeping mechanism. The blockchain is a decentralized general ledger database. So it's maintained globally throughout the world, and no one's ever hacked it. There's been no issues with it to date. And Bitcoin is just the first use case for this technology, which is what you see a lot of in the paper. So if you think about what you can do on top of Bitcoin's blockchain, this is what you'll read a lot about in the news. You can, digital currencies is just one use case. So, Bitcoin is one use case, and there's a tremendous amount of real-world applications for this. For instance, if you want to send money from California to Mexico, the remittance market, that's a huge corridor for that. You could use Western Union, MoneyGram, you'll pay $20 to move money. You could send, if you want to send $5, good luck with that. That's going to be pretty hard to do. Try sending $2 to Japan. Good luck. It's nearly impossible with the rails that the financial system is built on today. However, with Bitcoin, you could do that for basically free. But then, this is just one use case for blockchain technologies. There's a tremendous amount of other applications that can be built on top of Bitcoin's blockchain. We secure Bitcoin's blockchain. So that's kind of how we make money. And it also puts us in a very good position to not have to take bets on some of these different areas. Moving along. So Bitcoin's the most prominent use case right now for its blockchain, right, a digital currency. So why does it matter and why is it important? If you just think about gold, right, a lot of people love gold because it's a store of value. Why is it a store of value? Because people believe it has value. Just like diamonds. Why do they have value? Because De Beers tells you they should. But what is their actual practical application? It's just really a store of value. So Bitcoin has the same principle. There's a supply and demand, and if people believe it has value and it's a good record-keeping mechanism, which it is, then it will have value. It has a lot of traits that nothing else to date has had, and the biggest issue is it's not globally acceptable to a level that makes it a currency. It's still very small at this juncture. Greece is a good example why decentralized currency makes sense, right? I'd rather have Bitcoin than the drachma right now, and there's a lot of other countries I would, endure Bitcoin's volatility versus the currency. Argentina, a lot of other countries. If you live in the U.S., the U.S. dollar is a great store of value for the short run. Who knows in 100, 200 years? But that's a different issue. Just looking at it as, on a country basis, Bitcoin's kind of market values, let's call it $3.5 billion. It's above Guinea and below Brunei, right? So it's still very small, but for something that's just over 5 years old, it's pretty impressive. A tremendous amount of retailers are taking Bitcoin because it has low transaction fees. So if you think about American Express, Visa, MasterCard, it's 3% processing fees with about an average of 2 to 3% chargebacks. If you want to take money from someone in, let's say, Argentina, you don't want to take their credit card because most likely if they bought a TV in your Best Buy, they're going to call up and say, I never got the TV, it came broken, it was stolen, and initiate a chargeback. With the Bitcoin, it's digital cash. So you now have a store of value that can be moved globally, and it's maintained by a decentralized network. And again, that's just one use case when you start thinking about the applications of this. So adoption, despite what you may read in the paper about the negative of Bitcoin or the price drops, is really irrelevant. Adoption is growing at just a great pace. Merchants about over 400% compound annual growth rate. Number of transactions on the blockchain is growing. It's quite frankly going exponentially. There's a tremendous amount of money coming into the space, but it is the early days. It's kind of like the internet in '95. Actually, more money has been invested in blockchain technology companies than in the internet in '95. The internet didn't go away, and the internet's a great example. It kind of changed the landscape of how we do commerce and other services. The financial system has not changed with technology. The front end has a little bit. Now you have online banking and mobile apps, but the rails and the back end have stayed the same. And blockchain technologies have the ability to truly disrupt not only the back end of financial systems such as banking, but also the securities market and other ledger-based systems. A tremendous amount of high-quality investors are coming into the space. Goldman Sachs put $50 million, or was in a $50 million round to Circle Internet Financial. Coinbase raised over $100 million and included the New York Stock Exchange as an investor. And the list goes on. So let's talk about what BTCS does. We started as an e-commerce company and have quickly shifted over the last year through a couple investments in other companies. GoCoin, a payment processing company we invested in, an ATM company, and a few others, to securing the blockchain. We believe securing the blockchain is a cash cow in the industry, and it's where you can make money today. I don't really want to build a business on, beyond the horizon. I'm more focused on building a business that can be profitable in the short run. And I mean in the short run, 1, 2, 3 years, not 5 years. And I also don't need to take a bet on what's going to make it. There's 3 companies right now that are focused on the securities market: Overstock, NASDAQ, and a company called Symbiont. Maybe one of them fails, maybe all of them fail, maybe it's a new player we've never heard of. If I secure the blockchain, the probability that we're successful is much higher because we're sitting there at the cash cow and we don't have to take that bet. And when we do decide to take that bet, we can make it strategically and look at the other areas of blockchain technologies. So, as I mentioned, we make our money through the transaction verification services business. Sometimes that's referred to as mining. And basically, the way it works is if you want to send a Bitcoin from one person to another person, that transaction needs to be verified by someone that's running servers and maintaining the network. That's often called miners. And when we verify transaction, it's written to the blockchain, which is just a public database of every transaction that's ever occurred. We're rewarded with newly issued Bitcoins for providing that service. So if you think about, great examples, YouTube. When you started uploading videos to YouTube, there was no advertisements. They wanted to get to scale, get as many users as possible, then turn on the revenue machine, right? Advertise, now you've got the user base. To get a system like Bitcoin to work on a massive scale, you can't charge transaction fees, or no one will want to use it. You scare all your users away. So the brilliance of the system is you reward the people that maintain the system, the transaction verification processors, what we do, with newly issued Bitcoins for providing the service. So you want to move a Bitcoin from Bob to Anna, I get paid by the network. I don't get paid by you. Over time, the newly issued Bitcoins will be capped at 21 million and go to 0. So I will get a transaction fee. As the number of transactions go up, and we looked at the chart earlier, it's exponential, I'll start charging a transaction fee. If you want to move a Bitcoin from one person to another, you'll have to pay me a fee. If NASDAQ builds a private market on top of Bitcoin's blockchain, and they want to move securities around, and I secure the blockchain, you know what, I'm going to get paid a fee. Right now, it's newly issued Bitcoins. In the future, it'll be in transaction fees. So that's how we make our money, if that kind of hopefully explains it. We entered this market at the end of last year. In the beginning, there were unsustainable IRRs. People were making 2,000% return on invested capital. When the price of Bitcoin was $1,200, it was a bit of a bubble, right? The use cases are still being built. It's kind of like the internet in '95 or the internet in 2000. It blew up. It didn't go away. So we moved in right kind of when there was blood in the streets, and we rapidly scaled this business. We secured an 83,000 square foot warehouse in North Carolina, and we have a pending merger to acquire the leading server manufacturer, a company called Spindoolies, and I'll talk about that a little bit more. So what's happened is the difficulty level to earn or verify transactions and earn Bitcoins and transaction fees and newly issued Bitcoins. It's kind of plateaued. It's not as hard to do, and the prices drop, which means cost really matters. So back here, when no one cared about cost, it was kind of the gold rush. Everyone rushed in, and no one really thought about the long term. We entered at the end of it and are kind of picking up the pieces. So we've had a very strategic entry point. One of the things to think about is the network that maintains the Bitcoin's blockchain kind of distributes Bitcoins to everyone almost equally, right? If you're maintaining it, you get a pro rata share effectively. It's a little bit more complex than that, but for the most part, if the price of Bitcoin drops, because everyone says, well, what happens to your business if the price of Bitcoin drops? Higher cost operators will go offline. Think about gold mining. If the price of gold's $1,200, $1,300 an ounce, and you have a mine at $500, and the guy next door has a mine that's an $800 cash cost, and it goes to $600, you're still in business at $500, though you're not making as much. The guy at $800 is out of business, unless he has a hedge and it goes back up. So you'll effectively get more because there's a fixed supply. So there's a bit of an operational hedge, just when you think about what's our risk profile to price declines. We've had tremendous growth since we entered this business. In Q4 2014, we earned 52 Bitcoins. That's very small. Q2 this year, we earned 552 Bitcoins. Let's call it about $150,000 in revenue at a 58% gross margin. It costs us about $109 to earn a Bitcoin. That's using 0.65 megawatts of our power capacity. We recently announced that we've completed the build-out of our facility to 3 megawatts. And with Spindooli's next-generation equipment, we believe that could host 13 to 29 petahash of equipment, of the next-generation equipment. Right now, we're running 891, so just under 1 petahash. So if you can kind of do the math on that, we have tremendous upside potential in terms of revenue growth. Right now, it costs us between it's actually $109 to earn a Bitcoin. The new servers are going to be 3 to 5, or it costs about 5 times less to make. Our facility in North Carolina is just a great deal. It's an 83,000 square foot facility, a former hosiery manufacturing building. It costs us about $100,000 per megawatt of build out. And we have the option to buy the building for $775,000, less our security deposit and lease payments. So call it about $650,000, which is about a studio apartment in New York, right? Just to put things, and that's 1.4 times the size of a football field. There are some pictures of it. We actually have videos online. We do a video tour of kind of the inside of the facility. You can see it running. These are the servers running, and there's aisles going down. It has security fences, and we have a team down there that's running 24/7, keeping it running. We have a pending merger with Spindooli's, and this is the great part. We believe to do this in the most profitable way, you need to fully integrate. Meaning you need to design the chips, make the servers, and deploy them. Spindooli's sold $28 million worth of their equipment in 9 months of operation in 2014. They're audited by Deloitte. It's basically a 50-50 deal, except we share the dilution of all financing since signing an LOI. In April, we raised $2.3 million at 30 cents a share, which is about 100% up from where we are today, on the back of just an LOI. After that, we invested $1.5 million into Spindooli. And for that, we received a $1 million break fee in case they decided that they don't want to do the deal. We get credit for our investment. We invested on the same terms as their investors, and we get equally diluted by the 2.3. So it's actually a slightly better deal than 50% going to us post merger. They've been backed to date by 2 of the top Israeli VCs that put an aggregate of $10 million into their company, and we're excited for them to launch the next generation equipment. Right now, there's when I think about our competitors, they were previously in the business of selling their equipment to the general public, which is not a great business to be in. If you're going to sell it, you want to operate it yourself because the return on invested capital could be anywhere from 200% to 1,000%, if not more, depending on the price of Bitcoin. We actually launched a simulator on our website where you can kind of play around with the inputs to figure out what this looks like. From a technology standpoint, we're targeting an efficiency of 0.15. The lower, the better. Our competitors are Bitmain's at 0.5. They just actually came out with something I think is about 0.3, but still will be better in our next generation equipment. So all of the main competitors are in the business of developing, building, and deploying. As a merged entity, we are now in the business of developing, building, and deploying. You add our facility, their technology. They have hands down the best technology. Just Google around and see their product. You'll see it's got the best reviews. This is what we currently run in our facility, which is, I think, 97% of our equipment is theirs. Our only disadvantage is we haven't raised as much money as a combined entity as our competitors. We've raised about $15 million to date versus, our competitors. So if you look at kind of what the deal looks like on a combined basis, and I'll let you kind of do a little bit of math here, just on a trailing basis, if we have a $25 million market cap on a pro forma combined basis, let's call it around 50-ish. They did $28 million in revenue. We believe there's huge upside from there on a going forward basis. If you look at the competitors, Digital BTC is about a 5 times price to revenue. Vigogo is $1,000 in their last quarter. We're, in my opinion, a value play at this point for what we can deliver in the future if we're successful. Our team, my background, I was an engineer. Went back, got my MBA, and worked in finance for a few boutique investment banks, helping small and mid-cap companies raise capital and successfully getting numerous companies off the bulletin board where we are today onto an exchange. So I'm very confident that we'll be able to execute on our business plan and move this up to the NASDAQ, because I don't want to be on the bulletin board. As nice as OTC Markets is, I'd much rather be on the NASDAQ. Got a great advisory board, the kind of who's who within the Bitcoin and blockchain space. That coupled with 4 investments in the industry, we really have our ear to the ground in terms of what's going on in the space and how we can grow beyond just being a transaction verification services company. And that kind of moves us to the broader initiative. So we do have a multi-sig wallet we've been working on. We have our eCommerce site, and we have various investments in other companies with the end goal of, if these companies are successful, we could potentially acquire them or partner with them. But we have a lot of options, and being the only public company, pure play public company in the space, gives us a huge first mover advantage. So our growth strategy is to close the merger with Spindooli's, vertically integrate, basically turn on the money printing machine, because that's effectively what we do. We buy computers, or we design, manufacture, and deploy computers that print Bitcoins, which we sell for cash, if you want to simplify the business. Drive that growth through the third generation equipment, look at other low-cost data centers to expand this business, and then evaluate and build other consumer facing blockchain technologies that we can offer to the general public. So I've gone quite fast here because I usually get a lot of questions, but that pretty much sums it up. So at this point, I'd like to open it up to questions.
Yeah, so thanks very much. Maybe you explain, so your founder is the founder of your company, not the founder of Bitcoin. Is that correct?
Correct. So Bitcoin was founded by an anonymous person that goes by the name of Satoshi Nakamoto. He wrote a white paper of how this whole system would work and basically open sourced the software that became Bitcoin. Our founder created BitcoinShop.us, which was an e-commerce website that allowed you to buy and sell. It was the first company where you could buy products using Bitcoin as a digital currency, and we've since shifted the business from there. So we did not found Bitcoin. I'm not the CEO of Bitcoin. There is no central control of Bitcoin.
But there are obviously other Bitcoin entities. So how do you position yourself within that, and how is that all configured?
So I would go back to this slide. Bitcoin, they're not Bitcoin entities. Like the blockchain is a decentralized general ledger database, which is maintained by computers, like the ones we run, that maintain this network. So think of if you've ever downloaded music, right, from a service such as BitTorrent, right? How does that happen? Lots of people run software on their computer which share files. There are people that run these servers, like we do, and we're rewarded fees and newly issued Bitcoins for doing it, that maintain the whole network. So it's not controlled by a company, a government. It's decentralized and global, which is one of the reasons why the probability of it going away is very slim, because it's like whack-a-mole. You can't there's still peer-to-peer sharing of music because it's just almost impossible to get rid of. You can't get everyone. There are tons of companies building solutions on top of this technology, and they range from companies that do what we do, taking the transaction verification service business to an industrial level. We think that's the most profitable place to be. It's the cash cow in the industry, in our opinion, and it's a great jumping-off point to get into other technologies on top of that. There are lots of companies that build other services. A lot right now have been focused on digital currencies, though we're seeing a shift to other businesses, securities, record keeping, et cetera. Microfinance is a great example. If you want to send money from one person, if you want to send 25 cents to someone, or you want to tip someone a penny, right? How can you do that? You can't do that in the modern world, but you can with Bitcoin. You can do that today. So there are a tremendous amount of companies that are utilizing Bitcoin's blockchain as a technology to build solutions on top of. I don't know if that helps answer your question. I mean, there's thousands of potential use cases for this. Any other questions?
Yeah, the Bitcoin and OneCoin. So how do people select which one they pursue?
What do you mean, the Bitcoin versus?
Like OneCoin, these other companies, they all copy Bitcoin.
Okay,
OneCoin, in China, they
there's about 600 alternative currencies to Bitcoin. Alternative digital currencies. And so if I wanted to create Charlie Coin tomorrow, I could. Right? I'm launching Charlie Coin, and I'm going to take it, I'm going to run a blockchain of Charlie Coin on my computer at home. What's it worth? Nothing. Why? Because there's no network. Does anyone want Charlie Coin? No, because you can't. There's no infrastructure around it. Right? So, yeah, there's a lot of other coins. I think Litecoin is the next one down. It's about $100 million market cap versus $3 billion of Bitcoin. And it's one of these, questions of network effect. In order for Bitcoin to have value, it needs to be maintained globally, and you need to have participants in the market. Right now, you have that with Bitcoin. There's been over $500 million invested, and people are building solutions on top of it. Some altcoin that two guys decide to run on their home computers has no value because it has nothing, right? There's no network around it. You can't exchange it for dollars or yen. In our opinion, Bitcoin's going to survive, one, because if there are other coins that have technological features that are better, Bitcoin can implement them. There's a bit of a debate going on and kind of upgrading the block size. I don't want to get into that in too much detail, but it's amenable, right? I mean, you can change it to make it better. So why would you go to a new altcoin, right, where, honestly, a lot of them are pump and dumps? Like, why would you want to get involved in some, coin that's, who knows how many, some guy created it, and he's got a bunch sitting there, and he's going to promote it, and you can't buy anything with it, you can't do anything with it, you can't exchange anything with it, and this guy's going to sell into the market. And, yeah, they usually trade in pairs. You can trade a Bitcoin for a OneCoin or a, Charlie coin. I mean, it's a network effect, right? Betamax won over VHS. VHS won over Betamax because it had distribution. Betamax was a smaller tape, better technology. I don't even remember what happened with the DVD, high def stuff. I don't know, was it Blu-ray or I guess Blu-ray 1, I forget the other one. But it's one of these things that when you get to this certain size and scale, you have a network effect that just, the others are kind of meaningless.
What do you expect the actors to take?
I'm not giving specific guidance. However, there are two phases to get the acquisition complete. The first phase is signing definitive documents, which in my mind de-risks the company substantially. I've been spending, since we made our investment in April, right? We signed an LOI, I think April 5th. We made an investment, I believe, in May. Between April and May, one of the big negotiating points was, we wanted to have a break fee. We wanted everyone to be committed. We weren't going to let $1.5 million go out the door without kind of assurances that, hey, we're really going to do this. Let me just finish answering this one. The next phase is to sign definitive documents, which we've been working on. There are a lot of, it's an Israeli company. There's a lot of, tax and other issues we've been working through. After we sign documents, and there's an Israeli government approval process, which could take, anywhere from, 2 weeks to 3 months. And that's, people ask me when my registration statement is going to go effective. I say when the SEC decides so. So when is the Israeli government going to approve put the stamp of approval on it, it's not. They're not as motivated as I am.
So they have the document?
No. So the next phase is to sign definitive documents. Then you take those documents and you go to the government and you say, hey, can you opine? In my mind, it's highly de-risked once we've gotten to that point because their VCs, their board, all their shareholders have signed. And what's the probability the Israeli government is going to stop a deal going through with the merger with the U.S. public company? I mean,
So when we expect a definitive agreement in September, October, November, already know?
soon. Soon. I don't want to give, it wouldn't be fair for me but soon. I've been working very hard on it, so. Any,
Can you, and I might have missed this, so I apologize. Can you just elaborate a little bit on what your energy consumption looks like and what you're paying for that?
Sure. So we're using about 0.65 megawatts of power currently. We just completed the internal expansion of our facility to 3 megawatts. The electric rates, and this is all publicly disclosed. You can go to Duke's Energy's website and see what it is. Right now, we're about a 58% margin. So I think it's around, starting in September, it should drop to, I think it's around like between 6 and 7 cents a kilowatt hour. It's not as, cut and dry, right? Because if you've ever read an industrial or commercial grade energy plan from a power company, it's based on demand charges, usage charges, on off peak. So right now I would look at it as the energy. Yeah, it's.
What percentage of your operating costs is that?
So it's right now it's our largest cost. So if you look at our last 10Q. That's a great example. We did, I think, about $145,000 in revenue, and I think it was about like $58,000 in electric costs. So we're about it's about a 58% margin. But we're looking at other data centers apart from North Carolina. North Carolina is not. It's very low power prices. Washington State's probably one of the cheapest in the world, right by the Grand Coulee Dam. There's another hydro facility in Canada where there's very low power. I'd love to be in the 3 to 4 cent per kilowatt range. Where we kind of win in North Carolina is our facilities $1.50 a square foot to rent. Our personnel are affordable, and we've cut every single cost we can in terms of the build out. We don't buy new equipment. We don't have backup generators. You don't need them. If our equipment goes down, you just don't make money for the period it's down. It's not like Google. Your equipment goes down and someone tries to Google something and it shows up blank. You have a major issue. For us, it's, if it goes down, you don't make money for 20, 30 minutes. So, we've, for instance, like power distribution units, these big PDUs that run our equipment. There were some, I can show you a picture of them. These you typically run, 20 grand a piece if you bought them new. These things right here. We've been buying those, from liquidators for like $2,000 a piece. We've cut, it's a cost game, right? And I don't care if we're doing $100 million in revenue or, $100 grand in revenue. We want to play this game of always build it with a cost conscious, mindset. One of the things that you should kind of note is, as we built this out, in January of this year, we raised $500,000. We had kind of a weak balance sheet at the time. The round was led by my mother with $250,000. That allowed us to secure this building and have a purchase order for about $225,000 from Spindooli's. I participated in that round. Our COO participated, and our lead developer participated in the last financing at 30 cents a share. I put in 20 grand personally. Our COO put in 20,000. So when we think about how we build our business, we're very cautious about, one, dilution to our public shareholders, and two, how we spend money, because for the most part, we've put a lot of our own money in this company to date. I don't know if that probably a little bit more detailed than you asked for in your question, but. Other questions? All right, great. Well, thank you for the time. I appreciate it. And